Good morning everyone, I hope that you are doing well. Welcome to this new trade breakdown lecture of the trade which I took shortly after NFP on Friday. You have just seen my execution video in which you saw me shortly after NFP targeting sell-side liquidity. This was a very clean short and I want to break down this trade to you. I'm breaking this trade down both to the public as to my private mentorship, and the reason why I'm doing so is because I'm a bit short on time this week because I had a very busy week. Now, when it comes to the hourly chart of Nasdaq, what I want you to see is that what we will discuss today is the concept of thank God it's Friday. What thank God it's Friday means is the following. Whenever you have a trending week in which the market is just drawn towards one side of liquidity, in this week, buy side liquidity resting above the previous week's high, the moment that buy side liquidity, that drawn liquidity gets reached, what you can anticipate is that Friday is likely going to retrace into the weaker range if the time is right for that to take place. So what that means is that we're looking actively for signs to confirm that. So as outlined prior this week, what I was monitoring was the following. I was monitoring the reaction to the new week opening gap right here because this new week opening gap was the main range to monitor for this week. What you can see is that throughout the beginning part of this week, the market was stuck inside of this very large new week opening gap. There was high resistance liquidity runs all over the place. What you can see then is the following. On Wednesday, we see the market expand outside of it, and Intermarket relationship confirms this. What you can see then is that on Thursday, we see a very choppy day take place, and this is a result of NFP taking place on Friday. Consolidation is taking place, and what is occurring? Liquidity is being engineered on both the sell side right here as on the buy side right here. So why is that important to note? Because that already sets the stage for Friday's delivery, where I'm anticipating that when Friday runs that buy side liquidity engineered above this Thursday high right here, and we see the market take out the previous week's high after NFP, to me, that's already everything which I'm looking for from an hourly chart to confirm to me, alright, we're likely going to draw towards sell-side liquidity next. What you can see is that the market just reprices above the previous week's high, right here, and we then quickly reject it, and we begin to see the market draw towards sell-side liquidity engineered below these relative equal lows. And where does the low of day form on Friday? It forms back inside of the price range of that new week opening gap right here. And that right there shows to you why it's so important to pay attention to these ranges to monitor, because the reactions to these ranges to monitor literally tells you the order flow. Now, why is this concept so important to understand of thank God it's Friday? Well, in a trending week, who is making money? Everyone who was buying the market was making money throughout this week. They are trading their stop losses to daily lows, which formed. And therefore, we know that sell-side liquidity has been engineered underneath these relative equal lows, for example. When the time is right, what IPTA will seek to do is that it will seek to reprice below those relative equal lows. And there's a move which we can look to participate in, because when the time is right, that sell-side delivery is going to take place. Now, when we pay attention to intermarket relationship then, what you can see is that on the left, I've put the Nasdaq, and on the right, you can see the ES chart. What you will notice is that Nasdaq took out the previous week's high, whilst ES never took it out. You see that ES made a lower high relative to the previous week's high. That right there is a cracking correlation, and that is SMT. When it comes to a weekly high, which is not being taken out on one of the markets, whilst the other one does, that's a very important sign to monitor when it comes to the remainder of the week. If you pay attention to the beginning of this week, you will notice the same on the weekly lows right here. That confirmed to me the buy program. When we pay attention to the 1 minute chart of Nasdaq then, what you can see is that we had the NFP delivery right here at 8:30. At exactly 8:30, what you saw is that there was a lot of volatility which got injected with the release of the NFP. Notice that they first saw the market reprice higher, reprice lower, and that right there is the whipsaw which is taking place, where they're literally utilizing that release of NFP to take out both sides of liquidity. And when you see a large range like this get established within such a short period of time, you might think to yourself, oh, it would be great if I would be a part of that move. It would be great if I would be inside of the position when the NFP release takes place. Guys, stop thinking that way. Simply because there's a volatility injection and you see this very large range get established, it doesn't mean you need to be a part of that. If you try to trade in advance of NFP, you're absolutely gambling and it's not possible to do it consistently. The reason why is because NFP invites manual intervention. It's a perfect smokescreen for these market makers to go out here and reprice the markets in a very aggressive manner. What you can see is that after NFP at 8:30, we see the market slowly grind towards the upside. Between 9 to 9:30 a.m., we see the market consolidate. And that red line is very significant to note because that is again the engineering of liquidity which is taking place. We see the market open up at 9:30, initially go lower, and notice how it quickly expands towards the upside here. Notice how you see these very big green candles form, and you see imbalances form. That right there is very important to note because that right there shows to you that they're giving away the idea of, all right, you know what? We're in fact very bullish and every single retail market trader will try to chase it. They will simply try to go long on Nasdaq because they see these very big green candles and they think to themselves, buys, 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 buys. What pattern traders based upon ICT concepts would do is they would look at these imbalances as potential long opportunities. Why? Because a bullish fair value gap is a buying opportunity, right? Nope. Notice that I'm not speaking about any entry pattern yet. I'm simply explaining the logic which I see to you. And isn't it funny to understand that I literally had this price level of the previous week's high already on my charts the moment that we open up this week? Meaning the moment that we open up on Sunday, I already knew what levels I would likely look to trade off. Think about that for a moment. I know what levels I'm looking to trade off when they get reached during the right time. When you begin to come to that level of understanding, you immediately begin to basically let go of all fear of missing out because you know when and where the next opportunity is going to present itself. And man, oh man, in a year from now or in 2 years from now, if you put in the work, you are going to experience the same thing and you're going to feel a sense of calmness that words can't describe. So please study in depth. Market takes out the previous week's high right here with this short wick. We then see the consolidation take place. Eventually the market rolls over and you can see that I went short right here. At 10 o'clock we had medium impact news and we saw the market reprice aggressively towards the sell side liquidity pool, which I had annotated here. Now before I put my lipstick on, I want you to basically utilize what I just outlined to you as an example of trying to put in your own mind what I just described. Because it's very important that you break down this delivery for yourself before I put on my lipstick. And I know that some of you are not a fan of this. You just want to get to my annotations, right? But trust me, this is exactly what you need to do. So here I've put on my lipstick, and what you can see is that I first of all annotated the NFP high right here. This is a key buy liquidity pool, which is time-based, and the NFP low, which is again a key sell side liquidity pool, which is also time-based. Now, what you can see is that next to that I've annotated this low right here. And we'll get to that in a bit, because this low was a balanced price range, which I utilized to go short of. Now, what you can see is that when we look at the indicator which I use that plots these boxes on my chart, you can see all these scored boxes. You can see these boxes that represent specific windows in time and the ranges within those windows of time. Now, time cycles are a concept which I will introduce late to the public, and it's something which I have already released prior throughout 2024. So if you want to research that right away, you can go to my older content and you can study my lectures on the topic there. But within this 2025 public mentorship, I'll release a topical lecture on the topic later. My private mentorship students already know in depth how to use these time cycles, because when these time cycles get paired with price cycles, a whole new world will open up for you when it comes to the objectivity behind these markets. What you can see is that after 9:30, we see this quick run higher taking place. The market reprices above this high right here. Why, oh why is that so important? The reason why that's important is because that run above that liquidity pool is doing one thing. The run above that liquidity pool is trapping everyone into believing, oh, this high gets displaced through, now resistance turns support, right? So compare that to what I just outlined with these big green candles. Everyone is thinking to themselves, buy, 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 buy. However, it's in that moment of time that I think to myself, okay, we're going to wait for the time to be right for a reversal to step in. We see the market reprice above the previous week's high. We see it reject it. Notice that this wick gets established and I'm extending this wick to the right. This right here is my bearish rejection block. This bearish rejection block has to function as resistance on price in order for me to look at this delivery and think to myself, okay, we're going to turn around. Intermarket ratio plays a huge role in this as well. What you can see is that the market consolidates, and this is what we refer to as time distortion, where IPDA is simply waiting. It's waiting for the right time in order for it to be eventually allowed to expand. Time distortion is simply the following. Price is being held inside of a very tight range and it's waiting. Time is booking whilst price isn't doing anything of significance. The fact that the previous week's high was already taken out was the most significant moment for me, because that right there was my draw on liquidity on the upside, which I outlined prior throughout my public market review earlier this week. And when that draw on liquidity gets met and I begin to see the signs that show to me that we're going to turn around, that is to me the confirmation of, all right, we're likely going to change from buy program to sell program. We see the market reprice below this low, and from that moment in time, I'm monitoring how the next candle will deliver. Let me explain. This low is so important because it formed inside of this imbalance right here. Notice that this low also nearly lines up with this old high. Buy side has been delivered right here. There was a lack of sell side delivery, and that is why these bullish fair value gaps got created. Sell side gets delivered in the form of this low formation. We see the market reprice higher again and consolidates. The market then reprices below that low, so sell side delivery takes place again. What has just occurred? We have seen buy side once, sell side once, sell side again right here through that low. So what is missing? Well, if you look at it from this whipsaw perspective, you will notice that we have twice sell side delivery and once buy side delivery. So that's an imbalanced price range. What we're then looking for is the following. We are looking for the market to offer buy side once more. This is taking place inside of this wick. So that when the next candle opens up, we can anticipate that it will begin to expand towards the downside very aggressively soon. Why? Because the price range has been balanced and there's no reason for the market to retrace any deeper. IPDA has already done its job. High frequency trading algorithms are already short in this area, and that means that they are now allowing the market to expand towards the sell side liquidity pool objectives. This is a balanced price range, guys. And trust me, balanced price ranges are the reason why all of your PD arrays work in the first place. Balanced price ranges are crucial to understand. So investigate them, look for them, because I'm telling you, if you would go into the second time frame right here, you are going to see my market structure shift pattern of a BC low, CB retracement into that low, boom, there we go. And yeah, it's just awesome to see, and it doesn't get boring. Every single day, every single week, this level of technical precision is there. It might not be there always on the market that you're looking at. It's possible that the position is there on another market. However, every single day, IPDA is doing these things. And our job is to recognize on what markets it's active now. And on what markets it's the cleanest. IPDA delivers price all the time. However, on some days, it's going to be more clean on the Nasdaq. On some days, it's going to be more clean on ES. On some days, it's going to be more clean on Euro. Does that mean you need to trade every single market? No. It just means that you need to be able to recognize when it's clean on the market that you choose to look at, and that is what you decide to focus on. 10 o'clock medium impact news gets utilized to reprice heavily towards the downside, and that right there was a huge drop. And that is the environment where we're currently in, where a simple medium impact news driver can get utilized in order to reprice this heavily. And that right there is simply something which you need to accept now, because there's a lot of tension in the world when it comes to the trade wars which are taking place. And next to that, there's just a lot of tension in the sense of, oh, it feels like big changes are in the midst of making. And that is what you see within this delivery, where there's so much volatility. And when there's so much volatility, you need to be cautious with your position sizing, and you need to decrease risk significantly. Because else what will happen is that when you get caught up on the wrong side of a delivery like this, that won't be fun and you're going to regret having participated in that. So when we pay attention to the final chart of today's lecture then, what you can see is that I've put both the Nasdaq as the ES chart on my chart again. And what you will notice is that on the left, you can see that Nasdaq was making lower highs relative to these highs right here, whilst ES was consistently making higher highs. That right there is a big Kraken correlation which is being established. Now, when you pay attention to this delivery right here, what you will notice as well is that Nasdaq was of course already trading around the previous week's high, whilst ES wasn't close even to it yet. So that means there was a Kraken correlation relative to that very big time cycle in the form of that previous week's high, whilst there was also SMT relative to the smaller time cycles right here in the form of 10-minute cycles. When you have both forms of SMT, investigate that. So with that being said, I want to thank you for watching this trade breakdown all the way to the end. I hope that you enjoyed it, and I hope that you found something of insight from it. I really suggest you to re-listen to it if you just went over it without taking any notes, because I shared many gems. I want to thank you, and I look forward to speaking to you in the next one. Be safe.